Ladies and gentlemen, this is like a transformation. We are here at Block O2O at Hong Kong Blockchain Week, and we are now taking this to the world of FinTech and Fintech O2O. For those of you that have been here today, you've heard me talk about it a little bit. The Fintech O2O was a project between NextChange and Cyberport that we've been doing for years now. We've held events looking at what's happening in the FinTech space, of course, in Hong Kong, New York, Toronto, London, Seoul. We did Shenzhen, Ho Chi Minh. Did I miss any? No, quite a lot. And we're really, really pleased that we've been able to carry on this partnership with Cyberport over the years to tie people together in the global FinTech community. Today, we're going to change it up a little bit. We're going to be bringing back Dušan Stojanović from True Global Ventures. He's going to have a 10-minute introduction into the topic that is then going to take us into a panel. We've got an absolutely star lineup of that panel coming at you from Smith & Crown. Brian Lio, I promised you earlier, you heard me introduce his colleague earlier today. We finally coaxed him out of the Pacific rainforest of Portland, by far and away the leaders in providing fiercely independent, serious, and sober research in 2013 in the blockchain and crypto space. You saw Lisa O'Connor from Swift, a company that underpins the entire financial system and is responding to the change that blockchain is driving in the financial industry. The moderator for that session is going to be, earlier today I said there are 3 big Charles in fintechs, but there's really 2 Charles and a Charles. Because he is Charles Dusan. He is now the Director of Strategic Initiatives with ConsenSys, and it's a really interesting story there. DigFin has a great article where they interviewed him because they wanted to find out why ConsenSys was opening in Hong Kong. But before we get and bring those brilliant people on stage, we're going to welcome, for an introduction to the topic, the founder of True Global Ventures, legendary investor and entrepreneur. Please welcome Dušan Stojanović. Yeah. Come on up. He's back. Have we got a clicker for this man? Yes, we do. Right on the podium. He's good to go.
Is better? Okay. So I'll try to show you a little bit more of a FinTech detailed user cases as opposed to this morning, which was very, very kind of high level. Just to ask you the same question like this morning, just to see. So how many of you are coming from companies like large enterprises? Can we just see your hands up, please? So not that many. So entrepreneurs? Okay, so entrepreneurs. Investors? Okay, so mainly entrepreneurs and investors. Can you hear me okay all the way back there as well? All right, okay, so I need to speak up a little bit, that's what people tell me. All right, so I will tell you the story, where I started to make money as an entrepreneur, and the reason why I'm telling you that, because I think the blockchain technology is very similar to where we are today. I started one of the first internet banks called Mona Bank in Europe, way back when we only had modems. Some of you are old enough to remember the dial-ins when there was no Wi-Fi. It was a crappy experience, as crap as blockchain is today many times when it comes to scaling and speed. So you had to dial up, and then actually you could potentially get connected, and then you would do something. Believe me that it was difficult to set up an internet bank without any bank branches at all, and only have crappy dial-ins to get these customers. So to get customers to actually come to us in those days, we offered 5% interest saving on $10,000 US. So that means that we gave you 5% interest to do that horrible user experience of dialing in and not getting through. And then eventually you would get through, and we would help you with the phone and open up an account, and we would then cross-sell loans, insurance, and payments. And it worked. We had 350,000 customers. We had 350 people who had 12 million euros of profit. So why am I telling you that? Well, it was really, the infrastructure wasn't really there. And I think still that the infrastructure is not still really there when it comes to blockchain either. So there is a lot to be done on the infrastructure space. What I also want to tell with that story, that it's still possible to make money, even if everything is not perfect. And what I do want to tell you is that after that, I only invested in payments. And that was a must to do in 2004 and 5, because everybody who clicked on the different pages wanted actually to make sure that the payment would work once you clicked on an internet website. That was a must to do. And if the payment didn't work, people would get annoyed. And that was really not a pleasant experience if that wouldn't work. So what am I telling you then was that at that time, that's when I started to invest. Dips Debitech went from 250 people to 12, from 25 countries to 4. That's where I see a lot of blockchain companies going today. They're falling apart, and that means that it's time to invest for those who have the experience and the guts. So that's really what I wanted to tell you with that story. Now, my point is that there are some areas which are more mature than others. So with that analogy that I explained to you about internet banking and the analogy I explained to you with payments, there are some areas that I think are more than innovation. I think we are on early adoption. We saw this earlier today, those of you who were there earlier. So I just want to go a little bit slower on this one because I went very, very quickly. So what I'm trying to say here is that when you do a transaction with private stock, today it takes 60 to 90 days. Why does it take 60 to 90 days? You have money on one side and you have shares on the other side. So money and shares have to swap. So our old systems are using escrow accounts, and we then basically put money in the escrow, the shares got transferred, and then actually the payments comes as a result of the payment coming into the escrow. It's old-fashioned, it's done by escrow accounts, lawyers and accountants, and it's extremely costly, up to 10, 15, 20% on a transaction, 60 to 90 days. I want to show that that is something that the blockchain is capable to do today and is something that it can do and is doing. So this is not just hocus pocus, it works, right? So, and it's the same on the public stock as well. But obviously the timing is less in terms of how much you can cut the transaction time, but it's the same process improvement that is happening. So I'm still thinking about this as process improvements as anything else. Now I talked to you about shares push earlier today, so I'll skip that one. And I'll talk earlier to you about Ripple. The one that I really want to point out for you is JP Morgan. In September 2017, Jamie Dimon said the following, that something about that crypto is the biggest fraud in the world. That was 18 months ago. Today, JP Morgan is rolling out their own JP coin using for settlements. A very good colleague of mine, Tim Draper, said the following: it's like a disease. First, the disease comes, and the big enterprises, including the financial institutions, try to resist it. Then when they see that the disease is not, is going to disappear, they need to deal with it. And that's, I think, what the financial institutions are doing right now. They are there and they are implementing this in big institutions. No matter if it's JP Morgan, Goldman Sachs, Chinese banks, you name it. And it's coming in these settlement processes and in the payment processes. Now, one of the bigger user cases that I didn't mention this morning is health and medical user cases. And this is huge. This is probably the largest area of potential that we have. There are many different areas of it. As you can see, this is a slightly complicated picture, but I think one area that I am particularly interested in is provenance. You do want to know that the medicine you actually eat is the medicine that it says that it's supposed to have in the right dose, and you don't want to be fooled about that. That is a user case that is very relevant in China. I think China will be at the forefront in many of these areas and has nothing to do with crypto. When it comes to insurance, it's the same story that you've seen in the different value chains that we've showed earlier. It's about the risk coverage. The smart contract, again, is helping on the risk side. It's helping you to diminish the cost of a risk in insurance as opposed to new distribution channels. It's on the safe side that it's there. It's there in terms of decentralized distribution. On-demand micro-insurance is already happening because it's lower distribution cost. Fraud detection is definitely coming. Data privacy neighbors are coming in, and the reinsurance trading is coming. We believe actually that the insurance industry will be coming more than the banking industry just because the processes in insurance are very old-fashioned and very and can benefit a lot of process improvements. A lot of pictures and so on. We did talk about this earlier, so I'll skip those. So to kind of make a summary of all this. So when it comes to fintech and the impact of blockchain, one of the most strongest user cases that is there is obviously Bitcoin, which is completely anonymous. I would argue that Ripple, which is a very centralized approach and not really a decentralized approach, has also proven itself that the centralized approach works. So I wouldn't be so stuck up on purist decentralized solutions or centralized solutions to say, is the user case there? I would be way more pragmatic. Is it solving something that people are ready to pay for? And I think that's the user case we should be focusing on, as opposed to be purist decentralized or centralized. So the discussion shouldn't be, is there a real, truly decentralized solutions out there? Is there something there that people believe is a benefit that they're ready to pay for? If that's the case, the Ripple user case is there. If Bitcoin works, that user case works as well. And I think that's the only way to measure it. So today we have decided ourselves to invest in Series B, C of blockchain equity companies. So we have enough of deal flow today to invest in companies that are actually revenue generating. And that's why I'm very, very optimistic. As optimistic I was when the dot-com burst in 2000 and 2001. So that's really for me in terms of introduction of user cases in banks and insurance, and I'll leave it to Charles.
Okay, thank you very much. There we go, and we're going to ask the panel to come on up. Charles Dalsay from ConsenSys, leading the charge. Dusan, Brian Lio, CEO of Smith & Crown. Charles, tu es prêt?
Yes, always for you.
Okay, vas-y, Charles Dalsay, mesdames et messieurs.
Thank you so much. Thank you so much. So my name is Charles Dalsay. I used to be with the Hong Kong government. I was head of FinTech at Invest Hong Kong. I was the organizer together with the team of the Hong Kong FinTech Week. Over the past 2 years and a half, we served 450 FinTech companies. So it really gave me a very deep understanding of the Hong Kong ecosystem and helping a lot of different entrepreneurs and companies to expand in Hong Kong. So this is my background. A few weeks ago, I joined ConsenSys, the blockchain company from the US, which is focusing on the Ethereum blockchain. So if you're using Ethereum today, you're probably having your fingers on some of the products from ConsenSys. ConsenSys is a consortium of technologies and entrepreneurs. We are 1,000 people all over the world and focusing mainly on building infrastructures and applications on the Ethereum blockchain. But let's share a little bit of our time here with some fantastic speakers, which I will try to moderate. I know they will behave. And we're going to try to discuss about this blockchain and finance use case with many different kind of backgrounds and experience on blockchain. So it should be super interesting. Lio, would you like to start with a short introduction?
Absolutely. My name is Brian Lio, and I'm the founder and CEO of Smith & Crown. For those of you who don't know us, we're a blockchain research organization that's been operating in the space for about 6 years now. We look at the breadth of the space. This ranges from macroeconomic trends and global regulatory policy to a particular passion and focus on crypto-economic design, analysis, and implementation. So most of our time is spent conducting, publishing independent research. We also work with a number of different organizations to help them with tough challenges around the design of crypto-economic systems. A number of the organizations mentioned here today, Caspian, SharesPost, Bluezell are just examples of some of the different crypto-economic systems that we had a heavy hand in helping to design and implement. In addition to that, we spend a lot of our time working to scale information and intelligence through various platforms and initiatives.
Hello, Lisa O'Connor. I work for Swift. I'm the head of capital markets and standards for Swift in Asia Pacific. Swift, for those of you who are not aware, is a cooperative which is member-owned. We have 11,000 members globally, which involve corporates, asset managers, brokers, banks, market infrastructures. And we're also the oldest private cloud in the financial services industry. Our interest in blockchain is really around the points where we believe it may be a technology that solves some particular pain points that traditional technology has not in the past. So in my team in particular, we work with a lot of market infrastructures who are looking at how do they apply blockchain to specific areas and or to their entire infrastructure. And so we work on the business flows, the redesigning of those flows, and the data model that underlies the blockchain at those market infrastructures.
Yeah, so I kind of introduced myself before. In terms of the investment thesis we have, We are looking at 4 different layers, which is blockchain infrastructure, blockchain financial services, blockchain data analytics, blockchain entertainment, and then we actually have divided that even further into 14 areas. Why have we done that detailed analysis? We actually have an ambition of deploying $1 billion across these 4 verticals across 30 different cities or geographies. So we've been really trying to see how can we deploy $1 billion in a profitable way.
Excellent. Dusan, why don't we start with you? What are the use cases you've been seeing over the past 2 years which really excites you? We know you're involved with SharePost and the project you introduced a little bit earlier, but is there some other use cases which you're not involved with and which are really making a difference for you?
Is that works there? So it was there a little bit there earlier this morning. So one area that I haven't covered traditionally is real estate. So I'm actually very, very interested in real estate, both, like I mentioned this morning, in terms of that it becomes a digital asset, but then also estate. And with the security token now slowly being a little bit clearer of where it's positioned, I do see that area as very interesting. One area that I didn't mention this morning was logistics. So the whole of tracking logistics, the containers, I'm from Gothenburg in Sweden originally, normally not very forthcoming when it comes to blockchain. When it comes to logistics and that port, they actually have IoTs on the containers and then trackable by blockchain. And why is that important? Because if you can track all that, well, that helps you on the trade finance area. So the way you can hear our thesis, it's and then it goes into finance. Mm-hmm. So it's real estate, and then it goes into real estate financing. It goes into logistics tracking, and then into
Lisa, you're such a very kind of backbone of the banking system at Swift, and I'm sure there is so many people challenging you, offering you their fantastic services and technologies. What are the technologies or the use case which you feel this technology wave of blockchain is really bringing in the industry and which kind of catching your attention?
That's a great question. I think can you hear me? Yeah, I think some of the cases so we always like to start with what is the problem? What are we trying to solve? So there's no point in just re-engineering a process that works. There's no point in adding cost to the system where there doesn't need to be. So in a lot of cases, what we do from a use case perspective is we look at areas that traditionally have not been able to be solved by traditional technology, and we look at how we can improve upon those. So for example, things like proxy voting. An investor has the responsibility to end shareholders to vote to uphold their fiduciary responsibility, right? So, but for many years, investors and shareholders, they didn't even know if their vote counted in companies, right? So the process itself is fundamentally flawed. It's not giving investors, it's not giving end shareholders what they need back as information. And in addition to that, it's also flawed because the agents that are helping in this whole process are adding layers and cost and time and all of this type of thing. That is a ripe case for potential use of a DLT instance to provide the level of transparency, speed, and everything else that's required in order to really be able to uphold those duties to end investors. So those are the type of areas we're looking at. We're not looking to disrupt where it's not necessarily needed. So a good example of that would be in global payments. So for a long time, payments took a very long time to process cross-border historically. Nowadays, they don't. They take a matter of minutes. Even into real-time payment systems, they're not taking a long period of time, and that was because the industry got together, they agreed on a rule book, they agreed on how to track those, and they agreed on transparency on things around fees. So no need to re-engineer, no need to put a lot of cost into the system and have banks have to invest in it when they have infrastructure that exists that works today.
Is there some DLT solutions which are meaningful for you to kind of reach the last mile? The same way in logistics, delivering from one port to another, it's all a done business. There is very good players for that. But delivering from the logistic warehouse to my door, it's really where it costs the most, where it's most painful. Do you have such problems as well? And is a kind of an extra layer of DLT making sense over there? Or you tend to develop with the same backbone everywhere?
I'm glad you asked that question. In fact, what we've been testing out lately is something called it's the cross-border payments essentially into real-time payment systems domestically. So for example, if you're a Chinese person who wants to make a a payment into Australia as an example, you can use the existing Swift rails to make that payment into the NPP platform, which is the real-time payment system, within a matter of seconds. So it is looking at how do we link that cross-border leg to a real-time payment system, which does act in a matter of seconds. Aside from that, one of the things we also are quite keen on is the fact that standards and international standards should be an innovation enabler, not something that dampers innovation. It shouldn't be a competitive pillar for anyone. And so what we do is we work with organizations like W3C, which is the organization around the whole web-based payments and around standardization of payment initiations, so that people, the likes of Google and Microsoft and everybody, can have the same way that they do payment initiation from the web, regardless of where they are in the world. So that's part of also how we're working just as a standards body to help with that last mile.
Thank you. Brian, you've got your eyes on so many projects. You're involved with customers in the US as well as here in Asia. What are the use cases which kind of under the radar for you, but the most interesting or very exciting?
Sure. I'll take a little bit of a different approach with this. I think that you look out there and a lot of the stuff we've heard today is really interesting use cases, everything from logistics to payments to healthcare and beyond. What got us into this space and what continues to excite us is the idea, the use of blockchain technologies and incentive systems for governance. The idea that you can lock up capital, you can create a system of rules around it, and that those rules are immutable. Really, what that ultimately does is it gives us a programming language for governance. This is something we've never had before. If you kind of look at the systems of governance that we have over everything of scale, it's essentially whatever compromise stopped conflict or bloodshed, and then every step forward from there was some kind of compromise. We have never had the ability before to intentionally design a set of controls, of rules, a system of managing capital in a way that is incorruptible and immutable. And this has a lot of applications in perhaps very simple ways, perhaps very practical ways right now. But where we see that being most exciting is as an opportunity to take these individual use cases, perhaps even community-based use cases, build something that is thoughtful, that is intentional, that can move forward with consent in a transparent way, and then for those use cases to continue to scale up collectively into much larger things that result in much larger change. So the stuff that we are most excited about is really any project, any initiative, whether it be high finance, whether it be payments, whether it be logistics, and the experimentation, the implementation there of genuine systems of incentivization, of public implementation, and of open access to these kind of technologies.
In the project you've been involved with, have you seen some unexpected benefits from implementing the blockchain? So sometimes a customer come and say, okay, I need to clear and settle my trades and blah, 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 whatever is the use case. And then I would like maybe three of you to share with us some examples of a project being delivered live or a POC, and something pops up, and it was not planned. And it's actually a benefit from the technology, which has been unveiled by just getting your hands on together with the customer. Who is ready to take this one?
I can start, but it's a little bit too early to say that it's a concrete benefit, because concrete benefit for me means revenue, and we're not there, but we are there at least at piloting it. So we have one portfolio company called Bluzel, and when they pivoted a couple of times before they nailed down their business model, and now they're doing kind of the Oracle using decentralized technology in a very smart way, by the way, not using maybe I would say decentralized technology, but not actually blockchain technology because it's too slow. So given that they kind of understood that the underlying technology is too slow in terms of the decentralized database management they wanted to do, they went out and reached out pretty broadly in terms of who could be their first users. And especially the gaming community seems to be very, very involved and wants to use the technology. And then, okay, so that's from a user point of view. And then suddenly you come to the next thing, that actually a lot of gamers have extra capacity where in terms of their consoles or whatever they use. So suddenly you come up and the customer comes up, wants to use the database storage solution, but also has ability to provide database storage as well. So one thing leads to the other. And that wasn't always kind of perceived that it would be like that when they originally fought. So that's by coincidence. And I think that's actually the nature of what we do with distributed ledger technology. By tweaking, experimenting, some extra benefits come. And the more you tweak and the quicker you tweak, you get luckier, I usually say.
The faster you identify, exactly. Lisa, did you implement some blockchain and you were gifted by some unexpected benefits?
I think that the unexpected benefits that we've seen come really out of partnership. And what I mean by that is an example, so in India, there's a lot of work around the digitization of trade.
Yeah.
So even domestic trade in India is quite a burdensome kind of process. There's tax between jurisdictions. There's all sorts of things that come with it. Long story short, the government has gotten behind how do you digitize this trade so that eventually they can digitize their cross-border trade as well, right? So we started working with a company at the time called Monetago, where we worked with them on invoice matching. What that means is essentially what would happen is invoices would be taken to banks and would be financed. And there was a bit of fraud around this where people would take them to multiple banks and get multiple financing. And this platform essentially does the invoice matching. So we worked with them on the use of international standards in that platform for trade finance, which was really helpful for them because we had the international experience to bring to that. And then most recently, they've now started partnering with R3, who we've also announced we'll be working with to bring together really the physical trade of goods with the payment associated with that trade. So the nice kind of knock-on effect of that was the whole financing bit was done with one of the partners, and then they ended up partnering together, and then eventually we might have a full-scale solution that looks at addressing financing practically end-to-end all the way through to the payment.
Excellent. Brian?
Yeah, I think one of the things that we've really liked about this and that has been unexpected in the journey is talking to organizations and working through like how and where will blockchain technology disrupt or change the way that they do business or the way that their industry operates. And in a lot of these industries, there are a set of known issues, of things that everyone wished they could redesign, obvious inefficiencies. And what this conversation, what the whole idea of blockchain technology, of crypto, of a lot of its original roots has given us is a space to rethink the way that industries are structured. I mean, one concrete example of this is we've been doing a lot of work kind of behind the scenes in energy and entertainment. And entertainment is one where everyone understands that there's a lot of problems with the way arts and entertainment is funded, the way it's distributed, the way revenues are distributed on the back end. There are a lot of not blockchain solutions to these problems that would dramatically increase the ability for creators to get funding, for transparent payments and so forth, but it doesn't happen. But what these technologies have given us is a space to where people can reimagine business models, whether that's an internal system of compensation within a company, or whether it's the way an entire industry operates. It's given an opportunity to say, look, we have a more efficient way to do this. We have a better way to do this. We have something that's pretty transformative. And in imagining this new system, we have a chance to kind of rethink the whole way an industry might work top to bottom and to implement a lot of these changes that everyone knows should happen and that everyone wants to happen. So the ability, the space, and the kind of the openness for industry participants to have conversation about real change that's necessary has been one of the really exciting side effects of talking about these technologies.
I give you one example which came to my attention a few days ago. Actually, we have some projects where we design, and I was not aware it exists before. It's basically directional money. So we create value, and this value can only be spent wherever it's it's programmable money. So if you give money to someone to buy food, they can only buy food. They can buy food at different locations, but it's only for food. And what was really amazing is that was basically a fintech kind of use case. Like we share some money to some stakeholders, and they can only spend it somewhere. And it's actually this kind of programmable money was finding some use cases into a social impact project ConsenSys involved with, where you can basically share and distribute money to people and making sure this money is spent on what is supposed to be spent. And if someone touches this money, they can basically do nothing else than buying food. They cannot get any fee for anyone stealing this money because this money is actually already programmed to be spent somewhere. And that was a very, very funny kind of extra use case coming out of a fintech purely kind of type of programs and being able to reuse this kind of directional money into a social impact project. So that was a very much an unexpected benefit from that. Do you think a lot of the use cases in blockchain for enterprises and finance are involving a lot of consortiums, and when you want to work with people, you need to agree on standards. Do you have a feeling that sometimes the blockchain companies and the consortiums are running too fast? They want to work together and they kind of skip the standardization phase where they all agree what is what and how things should be done. I think there is more standards in the payment industry, but I know there is a lot of blockchain use cases which are trying to rise, and the standard can be sometimes a friction. So what is your views on that, and how standardization can help? Or should we standardize at protocol level? Should it be defined for every use case? Are the works from the Ethereum Enterprise Alliance and some other alliances useful? What are your thoughts here?
Okay, maybe I'll take that as the standards person on the panel. So under the International Standards Organization, there is a technical committee which is working on what should the standardization of blockchain as a technology look like, and when will it be mature, and when will it be able to handle the throughput? You know, what are the considerations around security, identity management, all of these types of things, right, are being worked through in this, and of course in the industry, right? But that's, as a standards organization, some of the work that's being done. From a business content perspective and business flow perspective, under the International Standards Organization, SWIFT as the registration authority for financial communication, has already done those models over 10 years ago. So a lot of what we hope to do from a business perspective is say that is completed, that is done. Please feel free, reuse it. It is open source, it is available. From a technical perspective, though, the view of that committee is that there's still a couple years to go on the maturity around some of the elements of blockchain, and maybe you have more technical background than me, but essentially that's kind of where we view things today. But from a business perspective, it's open, it's ready, and at least in financial services, it should be reused. It shouldn't be a competitive measure that people look towards.
So your standards are open source and available. Have you seen some consortium kind of helping themselves and picking up some of the standards?
Yes, in fact, we'll help people use them even in fact. So yes, there are some cases where ISO 20022, which is the standard, is being reused as the basis of the data model in the DLT platforms. So that's really what we say, regardless of the technology, whether you're using DLT, APIs, messaging, however you're communicating, reuse what exists today because it's been around for 10 years.
Brian, what are your views? I believe the technology is a coordination technology. Blockchain is all about coordination of things, but if we don't have standards, if we don't speak the same language, then we lose so much of the value and it creates so much friction. So have you been facing some standard conversations with some of the consortium you've been working with?
Yeah, I think standardization is a great topic, but we have a basic thesis, and that's that the industry goes through a fairly major change or reconfiguration almost every 6 months. And this says, if you look back at all the phases that we've gone through, it's been pretty dramatic. I mean, over the last 6 years, it's been an incredible series of pretty fundamental shifts in the mechanisms, the players, the methods, regulation, and so forth. And what's really exciting is we are in a phase of wild experimentation, of exponential development. There's this common, people like to say, oh, we're in X year of when the internet was getting adoption, or where that happens to be, but there's not a single curve here. We're not on a single adoption curve. Is every single industry that touches blockchain technology in some format is going through a different phase of adoption, of experimentation, of innovation. And it's really moving so quickly. It's hard in a lot of ways to address standardization because there's just so much going on and so much happening. So I think it will be a consistent challenge for people in the space to balance how quickly innovation is taking place, how much has yet to be developed, how rapidly things change, and this very important need to coordinate between different parties. So, how do you balance standardization with innovation? How do you deal with the rapid pace of development? That's a question that gets answered differently depending on what kind of organization you are, depending on what industry you're in, and depending on the unique needs of it. But standardization will continue to be quite a challenge, and the silver lining of that is it will be a challenge because of how dramatically innovation and development is taking place within the industry.
Some people say that there is a lot of POCs, there is some blockchain projects, and if you look carefully at all the flow and the way these companies and consortiums are working, things are actually kind of replicating a central kind of authority, and they just move to another kind of pipes and gain a little bit of efficiency, but the business model have not been reinvented. Some core costs all around running this business remain. Do you have examples where there was basically, you don't have to name these examples, but examples of blockchain projects, consortiums, big names, and actually if you look carefully under the engine, you will realize actually this is not really decentralized. It's basically the same players playing with different pipes, but it's all the same. And some others maybe projects which have been really working as a consortium to really decentralize things, or maybe the use case was just involving decentralizing things. Did some example come to your mind here?
Yes.
Are you really decentralizing things at Swift,
Yes.
or
No,
are you working
no,
with it being
I'm
more inclusive, but you remain the
trying
center?
to think about how to craft this. So I think that, like my fellow panelists mentioned, it's a good opportunity, blockchain or whatever technology, to readdress friction that exists in the current system. So how do we do things better? We should always be asking ourselves as a society and financial services, whatever, right? How do we do things better? I think that people go into a lot of these projects maybe not defining what exactly is it they want to solve as clearly as they might or should have, and many times end up getting stopped by barriers. So as an example, it would be maybe a market infrastructure who's trying to implement a DLT platform, who is told by the regulator, sure, you can use it, but you can be the only one that writes on the ledger, and you can be the only one that, that does this and that, et cetera, which leads you back down the route of, okay, this isn't a DLT platform, this is a centralized system, which, by the way, may have been able to be done with existing technology. So I think it's all about how do you define that problem statement? What is it exactly that we want to solve? And can blockchain solve it the most cost-effective way for existing players or new players that you want to bring into that ecosystem? And I think that because things are evolving so quickly, people don't always spend the time to craft that what is it we want to solve question, if that makes sense. So I have seen this myself, and I sometimes do wonder, may it have been easier just to use existing technology potentially to try to solve the same thing, or at least make sure you really define what is it you're trying to solve?
I mean, my point earlier was a little bit that some very good decentralized projects, like the one I mentioned before, is actually not built on a blockchain. So, one doesn't lead to the other. So you can actually do decentralized projects without blockchain. And within blockchain, you can have benefits that are very centralized, definitely in China. Ripple is another example. So one thing doesn't equal the other. I think for me, it's actually being extremely pragmatic. And one day we will come to maybe what we're all aiming for, which is these decentralized governments on the distributed ledger. But that's the vision. And between that vision and where we are today, money can be made. And that's what's good. Because otherwise our minds, I don't think, are ready completely for everything that the decentralized distributed ledger technology can do. That's, I think, the main hindrance of mass adoption.
So in terms of decentralization, I think it's a really interesting topic, because what does decentralized mean? There's a spectrum of it, but at some point you run into consensus, right? It's you have a consensus protocol of some format. If it's mining, it's decentralized and everyone can mine on their own computers, but then when you have to get access to a 7 nanometer fab or beyond, right, it's a lot harder to say that that is a truly accessible and decentralized process. And even if you take something like the base consensus protocol, if you put that aside, then it's the decisions about how these things move forward. And the challenge there is that then you run into a basic problem of human governance. We haven't solved human governance. I don't think that anyone would argue strongly that we have. And so at the end of the day, we still run into this problem as decentralized as we build the technologies themselves. At some point, human beings are involved. Human beings have to come together to make a decision, and that decision-making apparatus is really quite a frontier in the space. How do you solve the problem of governance? And perhaps like solve is too philosophical of a word there, but how do you create systems that most effectively, with the current set of knowledge and technologies we have, do the best job possible of dealing with governance in a decentralized way? And it's the kind of the time and a place for everything is that for the use case, for the solution, for the industry that you're in, how decentralized should it be? How do you want to approach the problem of governance? Who are the actors? How do you solve all that kind of stuff? But those are some of the most exciting questions when we talk about decentralization or true decentralization or what that looks like. Well, we have to also be asking ourselves questions about what does it mean to come to human consensus to deal with fundamental questions of governance and decision making. And that stuff's really fun. That stuff's really interesting. But it becomes philosophical on some point. Well, how decentralized is something? Is it really decentralized?
We've got 4 minutes. I would like, it's not a confessional, but I would like each of us to talk about mistakes or misconceptions you got in the past years about the technology overall and how you look at these kind of misconceptions now. I will start. I was really thinking when I discovered Bitcoin that Bitcoin will grow super fast and everyone will believe in Bitcoin because it was just such a natural thing for me. As that was a misconception. I was thinking maybe I was kind of early, but everyone will understood. It was so crystal clear for me. And I realized actually some people will never touch Bitcoin because it's too complex, or this will be hidden behind some stacks and stacks of technology if it's ever happened. But I had this misconception that it was easy to digest and everyone would kind of follow this. And obviously I'm wrong, or maybe I'm still too early, but that's, I try to be honest, and this is one of my misconceptions I got, or maybe mistakes. What is your misconceptions or mistake you've been doing in the past years?
I can go on that one, and I mentioned it earlier. I was invited to invest into Ripple in 2012-13. About decentralized in that system, and then basically I said this is nothing. This is why would I invest in this? And I didn't. I've been proven completely wrong. The company's worth a couple of billions in equity and 15 billion in tokens, just because I was a purist. The same thing with Ledger, which is basically just how you store the crypto. That's a piece of hardware, I said to Eric and Thomas then when they approached me. I've known them for years. Don't you have anything more interesting? But they found the need, that's actually what was needed in that market, in that stage. So 2 unicorns that I missed.
Well, I have to take that one head on. So I think where I was wrong was that, and there still is a future certainly for blockchain in financial services, but when it first came out, of course, super exciting, like wanted to try everything, tried a bunch of things, definitely failed at a bunch of things. But essentially, there was a belief that maybe it would take over more than it has for a lot of processes. And certainly what I didn't expect, but I'm very glad to see, is as it relates to cross-border payments, which is obviously the core of what SWIFT does, the fact that we do 300 billion a day across 143 currencies, across almost all of our 11,000 members, and have taken completely the friction out of cross-border payments down to seconds, transparency on fees, everything else, is indication of it's a good opportunity to rethink how you do things, but it's not always the technology that makes the biggest difference. Sometimes it's the community, and it's the members, and it's the power of that community that can change the future of finance.
So some kind of catalyst to rethink the whole, your whole ecosystem. Excellent. Brian?
For me, it was underestimated the damaging effect of noise in the space. For all of we were so deep in it, we saw amazing, innovative projects across industries doing great work, and we thought that would be more discoverable, more available, and move things forward. I think that the kind of the story about everyone trying to sell picks and shovels to the miners and that being the great place to be in the space, I think that there was way too much focus on that. And at the end of the day, what we really needed at the time was lanterns. It was like there was so much noise in the space. It became so difficult to find your way through it that a lot of people got turned off and so much got lost. So when we look ahead, it's our hope that their discoverability, the insight, and the availability of these great technologies will bring us forward.
Excellent. Very good insight, guys. I would like to thank you very much. Please join me with a round of applause for our panelists. Thank you so much.
Thanks, Charles.